Okay, good morning. It is 5:51 a.m. Pacific time. The date today is May 16th, 2009. It is a Thursday. I couldn't sleep, so I'm up early. And yeah, welcome to my video trading journal. Yeah. Still trying to shake the cobwebs, still trying to caffeinate. We had some news come out this morning. It was all positive. Not much response in the market just yet, but we'll see what happens. So for those of you that are new, what you're looking at here is the Jigsaw daytradr platform. If you want more information about it, look up their YouTube channel. They got a bunch of really good videos on how to use it. I'm not really going to tell you how to use it. I'm just going to show you my trades, and you can hopefully compare what you're doing or So from left to right, we have the Ultra Bond symbol UB over here. We have the ZB, which is the 30-year bond. The ZF here, which is the 5-year. The ZN right here, which is the 10-year. And all the way over here is the E-mini S&P, which is normally, in a healthy environment, it works as an inverse correlation to these products over here. So what did the overnight do? Give me a second while I pull this up. Let's go here. This is your overnight action. Actually, let me, it's right about in here. So we just sort of went sideways overnight. Just started selling off here early morning. And then we had some news come out right at 5:30. It's actually 7:30 Central Time. Again, it was pretty favorable. Had some housing start numbers. Let me see if I can. Anyway, I can't pull it up, but it was good stuff. Like continuing jobless claims, everything is pretty. Pretty bullish. So we had this sell-off here, violated the low, and we're also, this is a delayed chart, so we've actually traded down into this area. And now we're starting to push back up here. So let's see. As far as areas of interest at this point, so the economic calendar, let me back up real quick. That's already happened. There's nothing else coming up from what I could tell. Let me just look. Yeah, we have a couple auctions at 8:30, but they're just weekly auctions, 4-week, 8-week. Not really going to impact us. So I'm not worried about that. So all that stuff's in the past. Areas of interest, look at something, maybe a short at the overnight low. It's always going to act as a resistance level. We actually just started building some volume down here at 14.5, and I figured that would push back up, but we violated that again. So it's pretty much been a straight down market for the last few hours until that changes. That's sort of, I guess we're on the sell side bias. Everybody's anticipating a healthy rally from equities, I think, so be looking for that. So as far as any sort of entry, would be at the overnight low for that to push back down, continuation trade. Otherwise, I don't know, yesterday low might act as some sort of support. Might look at that as well. That's kind of what we're doing at this point. So yesterday I briefly talked about, or I mentioned that I wanted to talk about the different products and the reason why I only trade a certain handful. It really comes down to tick to commission ratio. My commission to trade all these products here is the same. However, the tick size is different. So what I mean by that is basically the number of ticks between each one of these levels here. So you look at the Ultra Bond at 30-year, they're the same. So you have 20, 21, 22. So one tick equals basically 1 point, quote unquote. You come over here to the 10-year, and it's half the size of the 30-year, right? So it's 2 ticks for 1 quote unquote point. So you have 14, 14 half, 15. So basically the tick size over here in the 30-year is, I think it's $30 or something per tick per contract. Over here it's $15, so it's half that size per tick per contract. And you even look at the 5-year, and a 5-year is half of the 30-year. So it's actually 4 ticks per quote-unquote point. So you have 1 here, then you have 12, 15, 17. It's really 1.25. So you have 4 ticks per point, quote-unquote. So if you look at a tick-to-commission ratio, it's more favorable over here in the 30-year. So for example, 2 contracts over here in the 30-year is equal to 4 contracts over here in the 10-year. So you're in essence paying double to trade the 10-year versus the 30-year. And of course, you can't trade both these products exactly the same way, in my opinion. So that all has to be factored in. But from a tick to commission ratio, you're better off trading the 30-year. Of course, the 30-year normally, because it's not as liquid as the 10-year, it will tend to rip your face off a little bit faster than the 10-year. And what I mean by liquidity is the number of, just so you look at the offer, the bids and offers, the number of orders that are stacked up here. This is very liquid. It has a ton of orders here. Look at the 5-year, it's a little bit less liquid. You look over here at the 30-year, it's even more so. And then you look at the Ultra Bond all the way over here on the left, and it's the most illiquid. Unless we look at of course, all the way over at the E-mini, which some of these bids are right now in this double digits. So I guess the last question would be, why not trade the Ultra Bond? And the Ultra Bond, the difference between the Ultra Bond and the 30-year is the margin requirements. Not a big deal, but something to factor in. You want to it costs more money, quote unquote, like as far as intraday margins to trade the Ultra Bond versus the 30-year. Ultra Bond typically is a little bit more volatile as well. So it'll rip your face off even faster than the 30-year, which will rip your face off faster than the 10-year. So yeah. It's my little lesson for the morning. I'm tempted to trade this little step here. If we get back down to this level. But I'm just going to keep an eye on it for a second. Maybe we'll back tick it. think we have already, but just keep an eye on that. There's your back tick. Go ahead and put an order in. See if we get filled. So we've sold down, like I said, quite a bit just in the last couple hours. Got to this level and we printed just at this level here. We printed almost as much as any one of these up here. So that's indicative. It can be indicative of buyers putting up a roadblock. Putting up a roadblock and reversing this back up. Sorry, I was a little distracted there for a second. I went ahead and paid up for that. I cut my lot size in half. This is the time of the morning when bonds will act independent of the ES, normally between 5 and 6 a.m. But it doesn't hurt if the ES cooperates. All that size that we saw trade down earlier, I don't think it was on the video, but I saw it trade down earlier. All that needs to cover at some point, unless they're long-term traders. So hopefully that will drive prices back up. If we do drop back in to 13.5, I got an order set there, and then I have a stop loss of 4 behind that because it has to trade through this level here in order to get down to my stop loss. And you want to keep that tight, at least in this scenario, because you never know when you might get a tweet or some other bullshit. And no sense blowing up your account over a tweet. So we already have the 30-year back up to the overnight low. The bonds are pushing higher. 5 years pushing higher. So I like how much this pulled off already. Already had 3,000 pull off. Stalled out, which is not good. Keep pulling off. There we go. Come on, take it. I'm going to adjust all this. I don't think that's going to drop in. Even if it is, I'm not sure I want it anymore there. Hopefully that was just some profit taking and not responsive selling. Put that at break even, I guess, and if I have to try to pull one tick out of this and then look at rebuying it, then I will. Hopefully we push higher and it hits my target at the overnight low. It's like, come on, that's 100. You got to be able to take that out. It's 6:08 a.m., so we have about 20 minutes till cash open. That could be a reason why there's a little bit of decreased price activity. It could also be a reason why a little bit of covering. Might need the ES to pop this 2861 level in order to push this higher. Might just be a one tick sally on this one, and we'll look to rebuy it on the way down. That might happen after cash open though. Definitely stalled out here. All right, one tick. I guess I could have hung in there. You never know on these though. It could just drop back in. Or like I said, it could have been people just covering their positions. It's always a tough call. You want to make sure you take profits. So I got about 20 minutes, like I said, till cash open. I'm going to shut the mic off, get another cup of coffee, The plan still would be to look at a short at the overnight low, or a retest here at the current low. But I think that's going to happen till after cash open. Got quite the profile step developing here, but the one thing to notice that stands out for me, I don't know if this is indicative of anything, but you have, it looks like sellers absorbing buying at this level, at least from, obviously this isn't the total, because you have 41,000 over here and only about 15,000 over here. So I lost internet connection and it unfortunately wiped out these prints over here, but just since this has come back down to this level, sellers have been absorbing all the buying at this level, so it's pretty rare you see that at the lows. Might be nothing, but it might be something. I just wanted to point that out. It's quite the shelf. It's impressive. I don't know how actionable it is just because we're 4 minutes till cash open. So if this does pop up and come back down, I would consider buying it, but that would have to happen many, many minutes from now. I mean, I hesitate really because we had really good data come out. People just need any excuse really to buy the dip, so there's just any sort of a buying opportunity. That would just put too much pressure on these guys over here, and it would just pop this shelf. I mean, we're seeing this over here in the 10-year. We're seeing it in the 5-year. Not seeing it quite in the bonds. Got a little bit of shelf, but it's not all that impressive. We very well could pop this by a couple ticks and then go right back up. We saw that happen the other day. The 5-year is starting to push through. But the 5 years, again, like talking earlier about liquidity, and it's a little bit more illiquid, so it's not going to hold a shelf, hold a tick like the 10-year can do. Doesn't always do it, but it can do it. So you had to see that coming, basically because of what was happening over here in the 5-year. Once the 5-year started to push that shelf, I mean, they just popped it and pushed that sucker right back up. So I'm happy to take that trade. It's still a little bit early in cash open, so we'll see what happens. But the fact that they tried to push it through and couldn't do it, that's pretty impressive. I'm willing to put my money down on that to see to see what happens. I mean, again, if the ES just bolts higher, it's just unrelenting, then we're probably going to be in a loser here, but still too early, still a little early in the day. Makes for an uncomfortable trade. Yeah, see, it's just too early. It's just too volatile. Looks like we're going to get stopped out here. The other thing we could do is pull this down a little bit, give it a little bit more breathing room, but it doesn't look like it's... Yeah, there we go. Okay. So... they don't always hold, like I said. It's still a little bit too early in the trading day, or at least for cash open. Should probably follow my own advice from now on. That's okay. I'm okay with that loss. So we are going to regroup and give this a little bit more time to kind of shake out. So this has been pretty much a one-way street thus far. I hesitate to fade this thing back up, but again, all this selling they have to cover at some point. Still just a one-way street. Still just watching. So what you'd like to see here is for as the ES continues to push higher, with each successive push, you'd want to see a non-reaction with these products. It kind of means that the sellers are being exhausted. And then you want to see, as the ES does fall back in, you want to see buyers step up. See, sellers are still trying to push this down. Sellers are still pushing this down, still trying to. Need buyers to absorb or first of all absorb, and then start pushing back. Haven't seen any of that yet. Good news is that we have quite a distance up until probably, 18 in the 30-year and 13.5 in the 10-year. That's where you'd think if you have buyers that are still holding on at this level, they would try to cover their positions and push this back down. So we have quite a distance to go if we were able to try to fade this back up. Just need somebody to put up a roadblock. We're here at yesterday's low. That might act as some support in the 10-year. So as the ES continues to push higher, see if we can get one more push higher. If these guys drop back in and hold, so I'm over here trading the 30-year for a couple of reasons. Mainly because if I wanted to get filled at 10.5 over here in the 10-year, I don't think that would happen because they were at 4,000 up. The other thing has to do with the tick ratio that I described earlier. But this sucker needs to go, and it needs to go quickly, or I got to take it off. Because, like I said before, the 30-year it'll easily drop in 3 ticks, and you'll be in big trouble really fast. But again, the more the S&P, the E-mini keeps pushing higher, puts more and more pressure on these guys over here. So it needs to drop in at some point for us to get higher. So it could be a little too early on this. I don't want to give it too much room, but I have to give it some room. So it looks like so we got another tick up. 10-year went bid at 11. You definitely see this getting all the way back up to 18. Again, you're going to have a decent amount of buyers there that are going to need to cover their positions. Try to scratch their trades. Oh, I need to put a stop in here. What am I thinking? Just in case we get a tweet. That was dangerous. We're starting to get a little push higher. Another tick in the 10-year, 5-year. Need the bonds to step up, keep it going. Got to keep an eye on this number here, make sure that sellers aren't absorbing any buying at this level. So that would be cause to cover. 10 years attacking higher, that's good. It'd be a bummer just to get one tick out of this trade. Like no buying after this dropped in. Come on, buy it back up. Just unrelenting. You know, I say that I got to be quicker in the 30-year, and then I treat it like the 10-year. I should have taken this off, and then just buy it back up if I want to. Damn it. I need some sort of pushback. Sellers are just still in control. Look at that, no buying back. Come on. Just cannot get going. Let's go, start pushing. It's fucking unrelenting over here. Jesus Christ. Ah. Took it off too quick, I think. Yep. As soon as I do that, every time, man. Every time. If it drops back in, I might buy it again. I mean, I could see this trading all the way back up to the overnight high once once things settle out over there, it's a bummer. So what day was it? Was it Tuesday that we had that like really low volume, just grind higher? So that's what this feels like. I think we had that was a down day too. That was a yeah, that was a scratch day, I think. This sort of feels like that. You could look over here at the 10-year, and you could see that sellers look to be absorbing all the buying here at 11.5. So that might give you a little bit of pause. That they might be putting a roadblock for any move higher there, trying to push this back down. Only 100 in the queue over here. Be nice to get filled before this, of course, moves higher, because I covered. Because the market is conspiring against me. Yep, not gonna get filled. Son of a bitch. Should have held that trade, man. It sucks. Hopefully it drops back in. I really like it at 12, not necessarily 13, but I was going to do one-on-one if it did fall back in. Damn, look at that. 400 up. So we popped that shelf over here, or the attempt to absorb all that, the buying at that level. Kicking myself, man. It's a bummer. It's the hardest part about this whole thing, man, is knowing when to get out. You definitely know when you're wrong. Just keep your stop loss in place. That's why I started setting targets and scaling out of positions for that exact reason. You just set the trade up and let it happen. If it only goes 2 ticks, then you get 1 contract off, 2 contracts off. So be it. And then it falls back in. Then you have the option to scratch the others, and you have, you know, a little bit of money. It's tough. This video is getting a little long, so I think I'm going to shut it down, and I'll restart it if I make any more trades. Really, the only thing I see now is if this falls back in, if the 10-year falls back down into 10.5, 11, or the 30-year again down to 12, 13, and buy that back up. Oh, that's about it. That's really all I see. I mean, you could try the continuation, or try to not fade, but try to sell this back down to see if we push the lows, but personally, I don't like that trade. So I don't feel like taking it right now. It's basically all it comes down to. Just don't feel like dealing with the stress of it, and the other thing is that you don't know when you're wrong. And I like knowing when I'm wrong. So anyway, shutting this down. I'll keep it close, just in case something else pops up. But yeah, done for the day. Sort of traded, just a quick review before we sign off, sort of traded a plan. We talked about selling the overnight low, selling this back down. We talked about buying the yesterday's low in the very beginning. That's sort of what we did. Obviously, these all trade in concert. So we just made the trade over here in the 30-year. Executed really poorly. Got in at the right level though. Just couldn't hold on, couldn't stomach the back and forth. Got involved in a little tick drama there. So yeah, sort of a good day, but not really. Poor execution, good planning, traded a plan, but poor execution. It just comes with practice, and you got to be comfortable with being uncomfortable. That's how it works. So anyway, I'll see you guys tomorrow.